What I'd like to discuss for this video is something called a preferred partnership, and these things are just absolutely amazing what you can accomplish. So what is a preferred partnership? Well, it's very similar to preferred stock. You're going to have two different classes of ownership within a partnership. And by the way, whenever I say partnership, this could be a limited partnership, it could be a general partnership, it could be a limited liability company. It really doesn't matter. But I'm just going to call it preferred partnership just to keep it simple right now. So with this preferred partnership, we're going to have two different classes of ownership. We're going to have the preferred units and we're going to have the common units inside this partnership. Now what's the difference between the two? Well, the preferred units, they're going to be entitled to a return of all the initial capital put inside this partnership. So if you initially set up this partnership and put, I don't know, $100,000 into it, whoever owns the preferred units is going to be entitled to a return of all that initial capital, $100,000 in this case, plus they're going to be entitled to a preferred return on their money. So let's say it's a 5% annual preference. The owners of the preferred units will be entitled to a return of that $100,000 whenever the partnership's ever liquidated, plus each year if the preference is 5%, they get 5% of that initial contribution, or $5,000 a year. So that's the preferred units. Return of the initial capital whenever the partnership's distributed, and their preference rate of, let's say, 5%. Now let's talk about the common units. The common units are entitled to any earnings of the partnership over and above the preference for the preferred units. So if the preferred rate of return is 5% and the partnership earns 4% for the year, common units get nothing. They get zilch. But if the partnership earns, I don't know, 20%, preferred units get the 5%, the other 15% all flows over to the common unit holders. So that's a preferred partnership. It's just a great way to split up the earnings of a partnership and allocate the safety and security of the partnership to one party and to give the risk and yet the greater return with that risk over to the other party. Why would you want to use a preferred partnership? Fantastic for estate planning, fantastic for income tax planning, fantastic for asset protection. If you have any questions about how to use a preferred partnership in your particular structure, by all means give us a call or send us an email. Thank you very much.